Hey, what's up, everybody? This is Chef again, and I want to just make a quick breakdown right now on the market on what's going on. Right now, it's the power hour, and I want to show you guys a few things as fast as possible, and give you some insight as to what may potentially come in the next, couple of days, trading days, in or potentially next week. First and foremost, we do have a nice uptrend on ES still. There's nothing changing about it yet. So the sentiment in the market is the trend is still your friend, so it's still bullish regardless. All right. That's number one. Number two, where did we actually trend change, and are we changing price action? The previous video that was posted, I did talk about the 50% retracement. So this 50% of this previous red candle, we would have to close above in order to be bullish. The only thing here that's now happening is that there's a major catalyst right now with Ukraine and Russia, and then the U.S. military getting involved in some war stuff. Now, I'm not here to explain to you every single detail, but definitely make sure that you do have the knowledge and the due diligence behind it to understand what's going on in the world and how it's going to affect the economy, or how it's going to affect the stock market in general in the upcoming days, right? So first of all, we do have a chart, and it looks like we rejected the supply that was built. Okay, so maybe you guys are wondering, well, where's the supply? All right, so this here, you can see all the candle bodies here, the structures. Okay, this is like your nice supply here that was built. Okay, and then you make it a lot bigger, and then you drive it down here. This is where the candle bodies could no longer hold any bullish positions. So this is why I said that the break of this trend here and the break of the price action is now coming to the downside. So the sentiment and the charts are still screaming bearish as of right now, but long term we are still kind of looking bullish. With a major catalyst coming in, it looks very negative now, and it's confirming now the downside and the selling pressure that's involved in the markets. Okay, so let's go look again. All right, so I'm gonna dive in deeper, and I'm gonna go into this 4-hour time frame, because that's the one that I like to look at personally. It shows all the price action, so I just deleted all that again, because you don't need to know the 4,700 level, right? So check this out now. Now that you get a little bit closer, we did drop down here, and then I did talk about having a bullish setup, right? So all the demand was created here with a lot of volatility, a lot of aggressiveness. The movements were very big and aggressive, huge red candles, huge green candles, while the stock market and stocks were hitting 52-week lows. So that was another sign of being bearish. But yeah, you're always going to get those relief bounces, the dead cat bounces, the pullbacks for the bearish sentiment and the bearish positions. So it's normal. Just like if you were have a bull run, you would get those red candles and you will get those pullbacks to dip by in a bullish market. So giving you a clear visual as to what is happening here on the 4-hour time frame. And then now look exactly what happened, right? We actually created this like double top right here, and this was major. The demand that was built here did not hold. So the double pattern played out perfectly according to the 50% retracement on the huge red candle on the weekly time frame. A double top pattern that actually played out and did not break to the top side. So meaning that the demand here was very, very weak. It wasn't strong at all. While the market in general is breaking down some patterns, like Tesla had an ascending triangle. As of yesterday was real tight, and then it closed on the bottom yesterday, and then it rejected today. Amazon's been rejecting. Google just broke down a major level. Tons of tickers that are reversing. Financials are reversing. RTY couldn't go above. /NQ couldn't go above, and the VIX is real high, right? So you have a multiple of things that are pointing to the downside. On top of that, you have a major catalyst that's affecting the market. Not only is it the war catalyst, but it's the interest rates and it's the inflation, all of it mixed together. So don't expect a bullish rally anytime soon until everything gets clear in the wind. As of right now, everything is still getting smacked. It is still being bearish. The volatility is still here. And let me just show you. Oh, by the way, before I do that, puts, I would get some time on some puts, and this would be your first target, which is your 42.50, 42.60. And right now it's just retesting. It's Friday, it's ODT. There's tons of people trading puts and everything. But if you wanted a stop loss, it'd be right here, 44.65. I am swinging puts over the weekend. I think it's the smartest thing right now, just because of the catalyst, and anything can happen over the weekend. I mean, we don't know what may come to play, but there may be war over the weekend. They may invade over the weekend and start sending troops, and it is just chaotic right now. So I'm not playing the news per se, but I'm definitely playing the bearish sentiment and the way that the price action is giving us the sentiment. On top of that, the catalyst is already in play as well. On top of that, the inflation. On top of that, the interest rates, and the charts are all breaking patterns. So anything can happen over the weekend, but this is why I am definitely grabbing some SPY puts. I have some time. I don't have the 18th. I think I have the 25th or the end of the month or something like that. But I did grab some puts, and I'm already like 50%. So let me just show you the VIX again real quick. And you guys know that the VIX is considered more like a pump and dump for me. But as you can see here, there is still a lot of volatility. This is the huge rejection over here. Nothing specific here, but it's definitely on a green candle for the week. And it's ending very aggressive. Let me show you another one. In times of war, I've told you guys in the past that gold has been a safe asset. So if the market takes a huge hit, where do you go? You go to gold and you start investing into something that's going to be safe for your portfolio. So this is more of a safer asset. And then today we actually broke out, and I think yesterday as well, we started retesting. Yesterday it kind of broke above, and then today it just blasted through. The other thing is that oil is still pushing up as well, and it's just making all-time highs, because again, if you guys don't know your homework, your due diligence on the war stuff, oil does get affected in a negative way, but it's positive for the green candles here. I hope that kind of makes sense, right? But yeah, that's kind of what's going on. I want to show you guys the bonds as well. It's at 19.55. This thing is still trending nice, and these things are still going up. So this is like no surprise, and this has to do with some of the interest rates that are being priced in right now and stuff like that. NQ, same thing, same setup as ES. We kind of just broke below all this demand again. We couldn't even break above, and then still rejecting. RTY, small caps, they're kind of barely hanging in there. Small caps have been very strong as of recently. So I wouldn't go puts on something that's still strong. I would only go puts on something that's already breaking, which is, the market in general. But that's why I'm in puts for this one, right? So, take this information however you want, and, only take what you can lose or win, whatever it is, as long as you don't get emotional, as long as you're here not chasing something that you don't understand. But again, guys, it's very difficult right now to identify how it's going to play out over the weekend. All I know is that everything is still bearish. Nothing went bullish. Here we could have been bullish had we closed above like 45.20. Then we would have held this base, but the catalyst and everything else is just driving everything aggressively, which is causing a lot of selling off in the market in general. And there is no sign of reversal whatsoever just yet. So we still got time, guys. There is still hope out there for the markets. There is still hope for some good news. Hopefully we don't go to like this World War III thing, but definitely something to keep in mind, that if we do, you know how to properly hedge yourself with some gold. You know that oil is going to be rocking and rolling, some energy stocks. But there's going to be a lot of other stocks that are going to get hit in the market in general. So make sure you guys do some due diligence and manage properly. Make sure your portfolios are safe, hedge properly and all that stuff. Only you're the one that can determine the value that you see, whether you're in puts or in calls or loading up shares or unloading shares, whatever the case may be. Please be wise and understand what's going on in the economy, guys. All right. So I'll leave you guys with that. It's a quick video, quick description for you guys as to what to look for. Airlines, again, by the way, they are getting hit pretty bad aggressively. Just because if we do go to war, I don't think anybody's going to be traveling. Financials, again, they're pulling back. We couldn't go any higher. So definitely look for, financials to pull back, and just to, like I said, in general, the market, so yeah, I guess I'll see you guys on the next video. Hopefully you guys catch this before power over markets close. All right, see you guys on the next one.